What is a net lease, and how is it different from a normal lease? In a net lease, the tenant pays some or all of the property's operating expenses on top of rent. It's the opposite of a gross lease, where the landlord covers those costs. Net leases come in levels: single, double, and triple net. A single net lease, the tenant adds property taxes. A double net lease, the tenant adds taxes and insurance. A triple net lease, the tenant adds taxes, insurance, and maintenance. The more nets, the more the tenant pays, and the more passive it is for you. Triple net is the most hands-off and the most common in single-tenant retail. Net leases give the owner a cleaner, more predictable income stream. Because expense increases pass through to the tenant, not you. That protects your return when costs rise. Always read the lease to see exactly which expenses are net. The label matters less than what the document actually says. Match the lease type to how passive you want to be. This is educational, not investment advice. Always review the lease with a qualified professional.